Hey guys, welcome back to the channel where it's the best place to learn about Canadian finance. Now for this week I have another topic ready, but I decided to make a PSA video for all the home buyers out there instead. Now I understand that real estate is probably one of the biggest purchases we'll make in our lives, so it's natural to get nervous, especially if it's our first time buying something like this. It also makes sense to go online and ask for more opinions just to get a better sense of whether we're doing the right thing or not. Even I myself have been getting questions in the private group or private message every day on buying properties. However, from what I see, usually either the questions are very specific and just focus on one thing and misses the big picture, or the answers given by other people are very extreme and often a blanket statement like, oh, you should buy it now because if you don't jump into the market right now, you'll never be able to catch up and you're going to miss out. Or they might be saying you should not buy now because you're going to lose a lot of money if you jump into the market right now. From my personal experience, buying real estate is not as black and white as these questions or answers seem to be, and if we just focus on them, it's going to often create a lot of confusion or overhype, and what that will often lead to is inaction. Now, inaction is different from deciding not to buy something and wait because you know what you want, you know how much you want to pay, it's just there's nothing out there that match you right now. That's deciding not to buy. Inaction is when you're confused, you don't even know what choice you should make, so you decide to make no choice at all. Inaction is the worst thing you can do when it comes to your own finances. So this is why I want to make this video. This week I want to walk through some thought process on buying a real estate. Now this is coming from someone who have bought and sold multiple homes and also have own rental properties right now, and also use the same thought process to guide my clients through their own purchases and have yield good results. So without further ado, let's jump right into the video. Alright, so in this video I'm going to go over three things. Number one is, do I have to buy a home? Number two is, when should I buy one? And number three is, how do I make sure I'm ready for one? Now, before we start, make sure you help me like this video so you can spread this to more Canadians who are looking to buy their homes. And also, if you haven't already, join my private Facebook group, link in the description below. Now, when it comes to the question, do I have to buy a home? My personal answer is absolutely not. This is absolutely not something you must do in your life. See, when it comes to buying a home, it's as much a financial choice as it is a lifestyle choice. So let's talk about both. Let's first talk about financial choice, which is actually one of the easier ones to talk about. And here is the question of renting versus buying. Now, this is often something people overlook. They always assume buying is better than renting. See, the truth is, for each side have its own pros and cons. When you're buying a home, you're making a financial decision to pay for these ongoing costs every month, plus committing the down payment that you have saved up for yourself. All these are actually opportunity costs that you could invest somewhere else and potentially get a better return versus buying a real estate. But you might say here, well, look at the house prices in Vancouver or Toronto or in Canada in general. The home prices for the last 20 years have gone up an insane amount. So of course, buying a home is a better choice than renting and investing on the side. Actually, saying something like this doesn't make sense because that's a result bias fallacy that you just fell for. What we're doing here is using past results and 2020 hindsights to justify the decision we're going to make today. See, as a financial advisor, if I were to tell my client, hey, this fund you can go all in because it has made 10% a year for the last 10-15 years. If I say something like this, they're going to call me crazy and probably fire me on the spot. Why? Because past results can't guarantee future performance. But when it comes to real estate, we often make these kind of statements. We're just assuming real estate is going to grow by a lot in the long run just because it has for the past 20 years. Now, I don't want to just focus on this topic, so for a much better and detailed explanation, I'm going to post some videos on the screen right here and link in the description below so you can check them out if you really want a detailed explanation what I've just talked about. But other than the financial side, we also need to look at the other perspective, which is the lifestyle side. Usually when I meet a new client, especially if they're first-time buyers, they usually tunnel vision on things like how much mortgage I can borrow at max and how many bedrooms that I can buy, etc. They've actually completely forgot that's just the start. The real game actually begins after you bought the house. Once you're a homeowner, you now have a very fixed set of routine payments that you have to commit to every month. These are things like mortgage payments, property tax, insurance, utilities, strata fee, etc. In addition, as a homeowner, you also may have to fork out extra to do things like renovation or just fixing things in the house that are broken. A lot of people, because they just focus on the start and they forgot about what's to come after you become a homeowner, they're not ready for this, and the lifestyle and happiness significantly drops after being a homeowner. And to me, that really defeats the purpose. And also, you need to understand that some people's preferred lifestyle is just not suitable to be a homeowner. And here's an example. One of my clients is a specialized contract worker who's making about $200K a year. She bought the house just before she became my client, and she ended up telling me that she absolutely hating it, and she ended up selling it after 1.5 years. She preferred to work 9 months very intensely and then take 3 months off to travel and sail across the ocean. But after she became a homeowner, she now feels very pressured to keep up the payment and keep working in case something happens and she can't afford a mortgage. And she felt like she lost a lot of flexibility and freedom by having a home because she can't uproot and go to another country and work anytime she wants. So on the screen here, you'll see a chart I made that compares the financial and the lifestyle pros and cons of buying versus renting. For the full size image, I'm going to put that in my private group. So if you haven't joined already, make sure you request to join first in the link in the description below. So here you need to ask yourself, knowing that the future growth is not absolutely guaranteed, if there's no foreseeable significant financial growth by owning a real estate, would you still want to own one right now? For me, my answer is yes, because I have been renting before with my wife and we rented a basement, and for that 1 year experience, we decided that renting is just not for us. We don't want to deal with landlords. We don't want to be in a place where we might be asked to leave because they want to sell their homes. We don't want to negotiate rent every year. So for us, the lifestyle choice of having our own space overrides the financial side, even if investing in the stock market and renting might be better for us overall. We still prefer to own our own home. So before you decide you want to be a homeowner or not, make sure you go through both sides of things and ask yourself what is really important to you and see if owning a home matches what you want. Now, let's say you went through the lifestyle and the financial comparison and you decided, I still want to buy a home. I still want to be a homeowner. Then the next question is, when should I buy a home? So this is the question that I get almost daily from my subscribers or my private Facebook group members. And they're always asking, hey, is right now the right time to buy? And if the price is going to go up or down in the future? Now, number one, to be honest, no one on this earth, including me, can tell you accurately what's going to happen with the price. If we can, we'll just be there full-time buying and selling real estate every day. Second thing is, it's the wrong focus anyway, and here I'm going to explain why. Now, don't get me wrong, price is important, but it should not be the only thing you consider and focus on. I get it, we all want the best deal, and that's how we're trained by the banks and institutions as we're growing up. They train us to focus on small things like the account fees, what's the saving account interest rate, and they really make us tunnel vision on this concept of trying to get small advantages for ourselves everywhere we can. And a lot of us, myself included when I first started, take this tunnel vision concept, translate this into real estate buying, and we focus and tunnel vision on the price only, and it doesn't really work out from personal experience. And here's why. The first thing is, if the price really drops, will you really buy it? A lot of us actually have the ability to buy, but we just want to wait until the market drops first. Now, if you look around right now, especially condos, they have dropped 5 to 10% or more from the peak price already, especially if you look at things like downtown Toronto. Now, for real estate, 5 to 10% or more is actually a pretty big drop already. But if we just focus on the price and we want the absolute best and cheapest deal for ourselves, we might not even go in even if it's 10 or 15% lower, because we might say to ourselves, if we wait another month, 3 months or 6 months, it could drop another 20%. Which may or may not happen, I don't know, but this will bring us the second problem, is if the price actually dropped that much, can you buy it? See, here I don't mean do you have the money to buy it? I believe you do, but the question is, who are you competing with when the unit drops this much? We want the best unit at the cheapest price. That makes sense, that's natural. But we need to remember, other people around us would also be looking at the same thing. So ask yourself this, if the unit you really want does drop that much, whatever the number is in your head, would there be other interested buyer as well? And the answer is yes, there would be. And these buyers might be just as motivated as you, or maybe even more motivated than you. Some may even offer full cash, 100% cash, no need for mortgage, no need for subject removal. Or they might enter a bidding war with you and don't mind paying a higher price than the listed price. So realistically speaking, what are the chances you can actually compete, especially if you're a first-time home buyer? And here's an example we went through when we sold our house. Our first purchase actually wasn't that good because we bought it in 2018. It's a one-bedroom in Richmond, which was close to the peak of the condo market at that time. And in 2019 rolled around with different legislation punishing foreign buyers. The condo market actually became extremely slow, and from the peak to our sold price, we probably lost about 80K in potential profit that we could have had. So big discount in a supposedly slow market, but that doesn't really matter. We still had a lot of motivated buyers coming in with all cash, no subject removal to get our units because it's a lot cheaper than the peak price already. So this is what I mean by don't tunnel vision too much on the price, because that's gonna make you paralyzed with choices and unable to act even if you see a unit you really like and is within your budget. Alright, so when should I buy then? Well, the right answer is actually whenever you feel ready. And here's the final part, the thought process I use for myself and my clients to decide if we're ready or not. So once we figure out being a homeowner is a good financial and a lifestyle choice for us, here's a thought process we use to determine the parameter of the numbers we can work with when we go hunt for our house. And I'll be using a real client's example and the numbers just to guide you guys through. So number one is determine the income you want to spend towards the house in total. Now notice here I didn't say determine the max amount you can borrow. I said the amount of income you want to use towards your home. When you go into a bank and you get the max borrow amount, that's what you can get, but that's not what you can afford. Most often than not, people are not comfortable borrowing to the max, and their daily expense actually can't handle that kind of payment. So you need to step back and first ask yourself, what's the amount I want to spend in total out of my paycheck towards my house? Now, in my client's example, even though the family income is 150K a year, they only want to spend 3,500 max per month on their house. So step two is remove all the non-mortgage monthly expense that you expect to pay towards your house. Now here you can either do some homework online to find the numbers in your area, or you can do a simple assumption and calculation of taking the total budget you want to spend per month, divide by 3. That's basically saying out of your whole budget, 2/3 is going to be for mortgage and 1/3 is going to be for all other costs. So in this case, 3,500 per month divided by 3 is going to be 1,166. So step 3 is take the total budget minus this, and it's going to give you the total mortgage payment per month you want to put towards your mortgage, which in this case is 2,333 per month. Now the next step is take that monthly mortgage payment number, work backward and figure out what's the amount you can borrow right now. You can either use variable or fixed rate, 25-year or 30-year amortization, that's totally up to you. But here to keep it simple, I'm going to use the T calculator, variable rate and 30-year amortization, which gives me a borrowing amount of $600,000. Also make sure if you do less than 20%, add the CMHC insurance on there. And this is something you should go through with your advisor together to make sure the number is correct. Now in this case, we're not going to add that because my client had more than 20% ready. Now just finding out your borrowing amount is not enough. You should do the very last step, it's finding out your degree and range of flexibility. So here you're going to do what if scenarios. For example, what if interest rate go up by 1%? Or strata fee, property tax, insurance all goes up 20% cost in the future years. And do you have any emergency fund on the side, or maybe a line of credit you could use should you lose your job or become injured? And how many months of payment can that last you? In my client's case, if interest goes up and the cost go up 20%, they will be paying about $4,000 a month, which they said is okay. They just don't want to start with $4,000. But if they start with $3,500 and it increase to $4,000 in the future, they would be okay with it. Now, if they were to say absolutely not, they want to keep it at $3,500, then maybe you want to lower your initial budget just so you have some room to work with. Should costs increase, you can still keep it under the $3,500 per month budget that you come up with. So if you do all this, now you know emotionally and financially you want to be a homeowner. You also know your affordability based on your comfort level. Lastly, you also know your range of flexibility on different what-if scenarios. Now you know very well what your numbers and parameters are, and my recommendation is, assuming COVID is okay, you should start looking and shop around. Now, I'm not saying you should buy right away, but it doesn't hurt to start looking. Because number one, you're going to get a real sense and experience of going through house hunting, what to look at, inspections, and maybe even making an offer. You know how all those procedure works. And number two, which is very important, you might find out very quickly your current numbers won't give you something you're looking for. So either you would have to expand your search area, you might have to live further, or one less bedroom. You might want to work on your down payment a little bit, or ask for a raise just so you have more room to expand your monthly budget. So at least now you know why you have to wait, because there are things you need to work with, instead of just waiting for the sake of waiting. Now, in my client's case, at the end, they bought a townhome, $750K. They're very happy with the purchase, and they were very comfortable with the monthly payment as well. So here I want to make some conclusion and some final remarks. Number one is, at the end of the day, no one can tell you what you should buy and when you should buy it. I can't, and others can as well. There's going to be risk no matter what you do today, you buy or you rent, and no matter how much preparation you do, there are just no way to remove risk completely. Even renting have its own risk. One thing to keep in mind is, if you're going to stay in your home in a foreseeable 3 to 5 years in the future, it can remove a lot of volatility that you experience in the short run. Now, from personal experience and looking at my clients, once we become lifestyle and financially ready and prepared, no matter if they bought at a hot market or a down market, I've never heard someone bought something and then later regretted buying it and said, oh, if I waited 6 more months, I could have bought it at an even cheaper price. I've actually never heard someone say this, because they were mentally prepared to be a homeowner already, and the joy and the happiness they get from living in their own home overrides whether you're buying at the best price or not. So that's why I want to make this video. I want to remove the noise and also the tunnel vision on just price, which leads to a lot of inaction right now. Now, for next week, I'm still going to prepare updates on different markets. So if you're interested in those numbers, make sure you tune in. I upload every Tuesday, 8:30 EST. Alright, this is Jacky. I hope you found this interesting. I'll see you next week. Bye.